Hello traders and welcome to another video review. Today is Monday, July 8, 2024. Let's find out what is going on the economic calendar at the beginning of the new trading week. Overnight data were in form of the adjusted current account and the current account from the Japan. As you can see, the current account is expanding rapidly in Japan. Home loans in Australia were completely not in line with the expectations. -2% was the actual reading, while the previous was 2.4, and the market participants expected 2% increase. German trade balance widens to 24.9 billion euro, which is more than the previous trade balance of 22.2 million euro. Eurogroup meetings start at noon. Then at the end of the day, we got the MPC member Haskel to give a speech. He is from the UK, of course. He starts to speak at 6:15. As you can see, there isn't any more important data releases for today. Very poor calendar for today. So let's just see what is going on the majors. We are going to start with euro dollar. Euro-dollar 30-minute chart is showing us a nice internal short-term trend to the upside, with the local high at the level of 1.0843, and it looks like we want to see the current situation on a 4-hour chart because this breakout from the falling wedge towards the level of 1.0853, where is the technical resistance, and the last swing high was quite successful. Bulls managed to even test the extremely overbought market conditions just at the level of 1.0443. Nevertheless, we still miss likely something like 10-11 pips for this level to be hit, so there is still some kind of a room to the upside. However, the market conditions are extremely overbought, and now they're coming down from this level. So possibly we will see some kind of a consolidation, some kind of little pullback to the downside. The supports are 1.0804, 1.0789, 1.0775. Only if we break below the all of three of these supports, the outlook will then change temporarily for more bearish, with the targets way lower. For now, however, it still looks very bullish. With this positive momentum after the pullback, there is a chance for a test of 1.0830 53 level, and then even 1.0917. So euro dollar outlook is bullish. The British pound is even more bullish than the euro dollar because the bulls broke above the level of 1.2777, made a local high roughly around 1.2817. And just because they hit the extremely overbought conditions on a 4-hour chart, they didn't actually went even higher towards the swing high and the range high located at 1.2857. Now it looks like the market is consolidating the recent gains, and it's trying to test this level here. So that's the change from the resistance to the support. So possible path and possible scenario for the British pound is that we will test this level here and then try to test the range high at 1.2859. So please keep an eye on the momentum on the British pound, and keep an eye, of course, on this situation here. It might develop very quickly. Only a sustained breakout below 1.2777, back down towards the level of 1.2712. Maybe there is one more level I should mention, 1.2739 would change the outlook to more bearish. However, for now it's still range trading. The major range is located between 1.2630 and 1.2857. As long as we trade between this range, levels, the outlook remains horizontal. We need a decisive, strong breakout to the upside or to the downside in order to get out of this horizontal range zone. Let's find out what the Japanese yen is doing. So we all know that we got the very, very difficult situation here for the Japanese yen, as it keeps moving up and up and up, despite the fact that the Bank of the Japan made intervention already. 161.96 is the swing high and the latest technical resistance. We still got this kind of a level here that can prevent the further movement to the downside. We got the level of 160.28. As you can see, this level has been completed, has been tested already, and just in case we break lower, there is one more technical support at 159.93. So this is the technical support, and the level above is the technical support as well. Let me just make it a little bit clear. This is the level of 160.28. So those are the levels. We got some kind of a let's say technical correction from the extremely overbought market conditions down towards the level of, let's say, 37 points. So that's pretty nice. However, there's still room to the downside here on the momentum indicator. There's still kind of a room to the downside here towards 200 periods moving average, so we can test it sooner or later. And then the market is ready to continue the up move. If we zoom out, you can see that this is very important area as well, because that's the previous big swing high and the level when the Bank of Japan made the intervention. So if the bulls wants to if they wanted to continue the up move, they cannot break below this technical support. They just need to continue to make a pressure on bears and go way above the current levels. It looks like the uptrend is still intact on the euro, on the US dollar to the Japanese yen. And last but not least, let's take a look at the Bitcoin, what is going on there. So we got the movement to the downside after the ABC correction was completed. That's obvious. We broke way below the technical supports that were the resistance, but we got the low is at the level of 53,444. Then we got the bounce, and this is where we stopped. The previous technical support now turned the resistance. Let me just mark it for you. My arrow, down arrow sign. So there you go. This is the key level to the upside for bulls. Only if we break above 58,489, we can say that maybe the bigger extension to the upside is in progress. However, we don't see any kind of a strong bullish pressure on this level. We just tested it and it was immediately rejected. So we got two pin bars here, then we went lower and then breakout low again. The newest low, intraday low, is 54,291, very close to the previous one. So this bounce is very effective in terms of the market mechanics. So we got very nice movement to the upside. We tested the technical resistance, but the bulls didn't broke above it, and that's a bad sign. It means that the bears are still the dominant force on the market. On the momentum, we didn't break above the level of 50. On the chart, we didn't break above the key technical resistance, and then another wave of the sell-off was made here, and we are down towards the level of 33 points on the RSI as well. So it all means that the bears are still dominant on the market. We can see more lower levels on the Bitcoin if the bearish pressure will be strong enough to push the market below the last swing low at 53,439. So please keep an eye on the current levels, especially on the technical resistance, as those levels must be violated strongly in order to change the current sentiment, change the current trend on the Bitcoin from the downtrend to the uptrend. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.